Hey there, my name is John Stevenson. Welcome to the Guaranteed Retirement Guy Show. Today we're going to be answering the question, how much does a $750,000 annuity pay per month? So if you are thinking about investing into an annuity, maybe it's less than this, maybe it's more than this, go to my website, johnstevenson.com, and look at my annuity calculators. You'll be able to find out for yourself what's out there. Okay, I show everything that's available. I don't hold anything back. Some of these pay high commissions, some of them pay low commissions, but it's really up to me as a fiduciary to show everything to you. So go ahead, go to the website, and you can check out for yourself. But in this video, I'm going to show you exactly how a $750,000 annuity will work for you. All right, so I'm going to share my screen. I hope this is helpful. Again, if you are thinking about purchasing an annuity, just go to my website, johnstevenson.com, look at the annuities, figure out what you want, and then book a call with me. Otherwise, there is a link below this video. All right, so looking at my screen, you will notice that I have someone who has $750,000. They're married. They're both 60. Again, these payouts will be very different if your ages are different, or you might be starting this a lot earlier, which is going to benefit you. Maybe your spouse is older. Maybe they're younger. Maybe you're not married at all. These payouts will differ, and that's why I always tell people go to my calculators and find out for yourself. We are also looking at the income rider. Income riders are attached to fixed indexed annuities, and they typically pay out the highest annual amounts versus any other option like a SPIA or a DIA. So, all right, let's take a look. So $750,000, if we're looking at immediate income starting next month, okay, you can see Prudential is the highest right now, and it's $49,000 per year, guaranteed income for both lives, okay? If we were to go and say, well, I'm going to do a single payout, not a joint payout, then you can see it goes up quite a bit, okay? So it just depends. Now, again, if you do a single payout, you might take that for 15 years and your account balance will be gone. And if you die, there is no more income that goes to a spouse. So this is why it's important if you are married to choose a joint payout because you want to make sure that income continues to your spouse. Otherwise, you need to have separate money available. So if something happens, which I do have people that will buy single payouts because their spouse or significant other has a lot more money. They just have different pensions that they're going to rely on and they're fine. Or maybe they're 20 years younger. And so in that case, a lot of times it is better to really purchase separate contracts. All right. So let's take a look and we'll go back here to joint. And you may be thinking, I want to invest into an annuity, but I want to let it sit for longer. What is the payout then? Well, if we push this out, let's say 2 years. So maybe you're thinking about taking Social Security at 62 and you want to start your income from an annuity at that time. Then you can see ClearSpring. They are paying out $58,577. Pretty good. And you got Corebridge, Delaware, and F&G, and so on. So pretty good payouts. Then if we say, all right, well, what if I wait till 65? Okay, is ClearSpring still on the top? They're close. They're at $76,170, but Nationwide is a clear winner for a 5-year deferral. So $78,000 guaranteed income. Again, this is guaranteed for life for joint. So if I go back again, if I say, well, just a single payout, of course it's going to be higher. And you can see it's like $82,000. So F&G in that case is the best for that. Okay, so if you're thinking a longer deferral time, then F&G is a great option for a single payout. Okay, so now just going back to joint here, I'm going to push this out a little bit further because everyone's different. And a lot of times when we look at this, we don't know when we want to retire. We just know we want to retire and we think we're going to retire at a certain age, but a lot of times we don't. We might work a little bit longer and we want to make sure that the annuity that we have will pay out more if we let it sit longer, and it does. So you just have to pick the right one that pays out the highest during that time frame that you're going to take income. So if it's 5, 6, 7, 8 years, find the one that's the best payout during that time frame. So at least you're locking in the best possible options for you during that time. All right. So again, we know just by looking at this that Nationwide and ClearSpring are very high for the first few years. But how do they look like at 67? Okay. You might have, let's say you purchased these planning to take it at 65. But then you change your mind to 67. Well, you can see ClearSpring is definitely the highest and Nationwide is close. Okay, so they kind of switch back and forth. And then you got Corebridge and Delaware that are up there as well. So, and if you were to put your money in Nationwide and you're like, oh, I'm going to take it in 5 years, but then you change your mind and you take it in age 67, it's still a good product. Okay. But if you know you're going to wait longer, then ClearSpring might be a better option. So let's go to age 70, because a lot of you do wait that long to take income. You might want to retire at age 70. You might want to take Social Security at that age as well. So payout's pretty good. Clear Spring's $119,000. That's great. Then you got Nationwide down here, 112. You got Midland starting to creep up. And you notice that American Equity actually got up here. American Equity is interesting. They actually are lower payouts in the beginning, but if you defer longer, they start to get very, very competitive as years go on. So I can pull this out like 15 years. Maybe your RMD age is 75. And you're thinking, I want to put money in from my 401k or my IRA into this, and I'm going to defer it as long as I can before I have to take money out, which is, let's say your RMD age is like me, age 75. So if that's the case, there you go. American Equity beating everyone out, $164,000 a year. So it's pretty good. Nationwide is up there too, but you notice that Global Atlantic's getting up there. Clear Spring, though, is still up there, but they're definitely not the highest payout for waiting that long. So if you're thinking, I'm going to let this thing sit and grow for a long time, American Equity is better. And the reason why they are better is because they have a longer growth rate, a longer time period for the growth rate for the benefit base here. So they're paying you 6.5%, and they're giving that to you after a 10% premium bonus. So they're putting $75,000 into your account because you put $750,000 in the beginning, and then they're taking that amount and they're multiplying that by 6.5% and then compounding it by 6.5% every year for up to 20 years. That's why they start winning later. They're not the highest payouts early. You can see right here, these are the early years. They're not the most competitive during those years, but the longer you keep them, they start beating everyone because everyone else has higher roll-up rates, paying more than 6.5%. They're paying like 8%, like Clear Spring was. And they have higher withdrawal rates over here, but they don't last as long. They might last 10 to 12 years. Okay. So for American Equity, you push it out that long, you're going to have like a benefit base of $2.2 million multiplied by 7.46. That's what gives you that income. Okay, if you take it earlier, this is what it is on each of those years because they're just taking these amounts and multiplying it by the withdrawal rate, and it gives you this, this lifetime income. And whatever year you started at, that's what you lock it in for life. Okay, so again, that's why I just tell people, I don't know your situation. You just need to go to my website, check out my calculators, and see for yourself and kind of see what these would do for you. All right. So again, we're looking at the income rider. The income rider typically offers the most flexibility because you might decide to take income in 5 years, but change your mind and take it in 7 or take it in 10, or maybe you decide to take it early at like 1 or 2 years. You can't do that with a SPIA or a DIA contract. Okay. You have to put in the date right from the beginning and you can't change it. Okay. So you have to make sure, like if you want that flexibility, you need to be looking at the income rider calculator. Okay. All right. So let's look at one more thing. I want to pull up the MYGAs. MYGAs are multi-year guaranteed annuities. They are fixed rate contracts. They're very much like CDs, and the rates are very good right now. So if I scroll down, you'll notice it's showing the top 3 for each of the terms here. Okay, so if I go down, just load some more here. All the way down. Most states will go up to 10 years. There are a few that'll do a little bit longer, but most of them are at this. So if you're thinking, all right, well, 10 years, I want to just throw this money in. What am I going to get? Well, you can see the top one is Exonic. Okay. So if I look at that and look at the rate that it's paying, it's pretty decent. Okay. My 750 turns into 1.281. That's really good. So that's a great place to park your money. You've got your earnings here. If you want to strip them off and live off the earnings, you absolutely can. So maybe you're thinking, I just want to take out $41,000 a year, live off the interest and get my 750 back. You can do that. People do that all the time. But if rates are at 2%, you're probably not going to roll it into another MYGA contract. You might buy an annuity, but the lifetime payout for that annuity at that point probably will not be, and I could just tell you I almost guarantee it will not be as high as it would have been if you had just put it into an income rider right from the beginning. Okay, so you have to realize that. The income rider, the value of the income rider will be much higher than 1.281 in 10 years. See, that's why I just tell people, if you're looking for highest income, I mean, even look at this one, American Equity. The value of the income rider is 1.6 million times 6.5. So you just have to ask yourself, if you're going to use something to grow it for lifetime income later on, pick the rider because the rider gives you a whole lot more growth. 1.6 million times 6.5. I'd much rather have that versus having 1.281 times 6.5. You see what I mean? So you just have to think about, what your end goal is. If it's highest income, highly consider the income rider. So anyways, don't take my word for it. Go to my website and check out the rates for yourself. And then if you're looking for an annuity, I'd love to help you. There is a link below this video. It will go directly to my calendar. We'll get on a Zoom call and I'll share my screen and I'll answer your questions. Otherwise, you can go to my website, johnstevenson.com, and you can check out all the annuity rates. And then if you want to, you can book a call there as well. So I'd be happy to help. No one likes to be sold. A lot of advisors will try to sell and push a product, maybe one or two or three products that they really like selling because the commissions are high and they get incentives, trips. I'm not like that. You'll notice on my website, I've got like over 70 carriers there. Okay. There's a ton of carriers and there's thousands of options. And it's important for you to see everything that's available before you make the decision so you don't feel like you're being strong-armed into something that you hope is the best for you, but most often is not. So I am very passionate about that. I think it's very important that people see everything that's available and that they should be able to choose for themselves and not have an advisor that is trying to choose for them and, not knowing that he's getting like 3% more commission from that product and they're getting less income than they could get from something else. So I hate that. And so it's really important for you to know how this industry works. Okay. Transparency is really important. So anyways, take a look. If you have any questions and you're thinking, I would like to buy an annuity, please book a call. Also, if you have questions, just regular questions, go ahead and comment below. I'd be happy to answer those. And if you like the video, make sure you click the likes, the subscribe, the share button. And I really appreciate you watching. I hope you enjoy these videos and look forward to seeing you soon.